Are we running out of gold? This is an interesting story out of Zero Hedge that I came across, and I wanted to go into this and elaborate a little bit. But anyway, I want to go into what it says here first. As it says, gold has been used for jewelry and currency for thousands of years. It has always served as a source of status and wealth. The reason for its popularity is its rarity. Gold is a finite commodity. There is only so much of the golden metal available, and it can't be manufactured. And I should add, it could technically be manufactured, but it costs more to manufacture it than it is to sell that amount. So, and it's not really good. It's not efficient. Maybe someday, and that's an issue. But nonetheless, yes, I mean, the value of gold comes from its scarcity. Scarcity, application, use, and demand, the subjectivity of value, which I will go into later on in the video. But anyway, carrying on here, it says, some experts, including Goldcorp's chairman Ian Telfer, are predicting that the amount of future gold to be mined is already on the decline. The fact that gold mining is on the decline is nothing new. This has happened before. What is worrying some investors is that the world may be running out of physical gold. I would not be too concerned about that personally, and I'll explain in a bit, but just to simplify it, when you have less gold, when you have a deficit in gold, the value of gold is going to go up. There's not that much gold in the world. It's very scarce, and that's what brings it, part of what brings it so much value. And you can see this chart here, gold discoveries versus exploration expenditure. And moving on here, should investors be worried, it says. And as it says, the discovery of new gold deposits has been declining while mining companies are spending more money on exploration for new sites. Most of the newly found deposits have been small and expensive to extract. No high-grade deposits with at least 5 million ounces of gold or world-class deposits have been found in a long time. These world-class deposits have yielded more than 50% of today's available gold. What little is being extracted is becoming costly to obtain. Many deposits are producing 1.4 grams of gold per ton as compared to 10 grams in the 70s. Mining companies are struggling. Many have merged to offset decreasing profits and declining gold supply. The gold industry has been witnessing a wave of mergers over the past few months as producers battle poor returns and diminishing reserves. In March of this year, Barrick Gold, the world's second largest gold producer, and Newmont Mining agreed on a joint venture in Nevada instead of Barrick Gold buying Newmont Mining outright. Newmont Mining acquired Goldcorp earlier this year in an effort at developing greater and more economical resources. Barrick Gold believes that Nevada still has plenty of gold, perhaps 76 million ounces. I just came from Nevada. It's huge. The gold exploration industry is getting a bit bigger over the last little while out there, and I've done interviews with some of the miners. Anyway, going back into the article, it says, according to mining analyst John Ing, it may be cheaper to buy another gold mining company than explore for new gold. This opinion is seconded by analyst Ryan Hanley of Laurentian Bank Securities, who claims that the time and cost of gold exploration makes mergers a more profitable proposition for these majors. The real problem is not the lack of gold, but the current price of gold. The price of gold has been holding at around $1,300 an ounce, down from its high of $1,800 an ounce, again, US dollars, in 2012. However, with peak gold in sight, we anticipate the price of gold to elevate so more exploration dollars can be allocated. The amount of money mining companies have allocated for new explorations has declined from a high of $21 billion in 2012 to $10.1 billion in 2018. It's a half. It's interesting. While global economies are currently presenting a strong picture, it is anticipated that economic growth will slow down globally. This could very well see the price of gold climbing to $1,300 an ounce, its highest level since 2013. A rise in gold prices is very likely with geopolitical and recession risks to coincide with peak gold. So I do want to add to this story here. Let's talk about for a second the recession indicators of the yield curve inversion that we are seeing, and we saw this 3 months ago as well at a smaller scale, and we haven't seen that really since 2007, and we've been warning about this for a couple years now at WHAM, and again, fear-mongering, says everyone, until it happens, because it's just basic economics. It's nothing, new or crazy. It's just the basics. It's been pushed off longer than it could possibly have been pushed off in the past, and it's propped up a system that is built to fail, and eventually has to, as all fiat currencies eventually revert to their true value of zero. Always have, always will, going back to 1024 AD in China. But again, looking at gold has been held like a beach ball underwater, pushing it down with pressure gaining all the time. And you can only imagine once the bankrupt banking system, which has incredibly low cash to deposit ratios, fails, eventually, and it has to fail, no idea when, but it will eventually, and it can't be pushed off too much longer. It should have happened already. But once that happens, their pushing down gold will relent, and we will see gold likely skyrocket massively, as we have seen historically. Preservation of value, wealth insurance, not meant as investment advice, and it's not even really an investment. And of course, you can check out our affiliate with Mike Maloney's goldsilver.com linked below. But anyway, I do want to add to the idea of, look, the scarcity of gold is dramatically important for the value of gold. Gold can only be created with supernovas, or has in the past, historically. What we've seen in the past, the massive explosions that have created this precious metal. And again, scarcity. It's scarce. There's not a lot of it. There's a deficit on the horizon too, which shows a more bullish market long term for gold. And when people are scrambling over it, and there's so much demand and there's so much application needs, as we've seen, then of course the value is going to go up. And the value versus the price of living, I might add, once the dollar is gone, we won't be basing it on US dollars. We'll be basing it on itself versus the price of living, how much it buys, its purchasing power, which people seem to not get, which is really strange. And again, you can't eat gold, though. I mean, you could eat a little bit of gold. I'm sure you could be fine by doing that, but not the point. Gold is part of the solution, not the entirety of the solution. And as people like Leo Gant said in a recent interview we did with him, it's just as bad to own only gold as it is to not own any gold at all. Diversification of your portfolio is incredibly important, especially long-term as we head into this recession, which is highly indicated and very plausible with the everything bubble worldwide as well, and this massive amount of debt, which can't go anywhere but a complete collision course. So, scarcity, application use, demand. Subjectivity of value. Gold doesn't have physical value. Physicality plays into its application use because it can be used for physical means. However, it is, because again, there's no such thing as intrinsic as defined as intrinsic, where it's just magically there. There's a number floating above it. This is how much you can buy with it. It's based on what people will use it for, sell it for, buy it for, what people will trade for it, or vice versa. So, again, this is something that is highly misunderstood, but value is subjective. But like if you look at a monkey or a giraffe might not be able to use gold for the same thing as you, and you go into these places that have been colonized in Africa, for example, and South America, the colonists come and they say, we want your pearls, and they say, well, we don't want these pearls, so sure, give us like almost nothing scraps for them, and then they go off and sell it for much more, because some people see value in it, other people don't. Well, most people do see value in gold. Nonetheless, if not everyone just naturally believes in gold, then it's no longer defined as intrinsic. It's subjective. But with that said, historically, gold and silver have been incredibly prevalent, and we're seeing the peak of gold-silver ratio again, as we've seen before in past crashes. So the potential going forward is massive and huge and great, and something people have to be watching, keeping their eyes on, and hopefully preserving their purchasing power with. if that is what they want to do. So scarcity is the major issue at hand here, and with scarcity comes, especially if you pair it with demand, scarcity and demand combined, then, and mainstream demand at that, you will see the value go up. People put bigger values on that which is scarce and in demand at the same time. There's a deficit. And then the application use is added to that, and with silver and copper as well, which we've gone into in recent days. Copper is facing a deficit, and yet there's huge demand, and going into the green, future that's been being pushed forward on us by like the United Nations and all these multinational conglomerates around the world. As this stuff is pushed on us, well, will you look at that? The value is going to go up. I mean, it kind of has to. Deficit versus demand. So I think that we see so many uses, application uses, paired with this scarcity and demand, that it's looking very good down the line. While it's not looking so good for the US dollar, what's wrong with the US dollar isn't necessarily that it's not physical. It's the fact that it's based on faith, which people can easily lose when the charade ends, when people realize that they just print vast amounts. There's quantitative easing, there's fractional reserve lendings, in some cases zero reserve policies that destroy the value. And the worst part, this is the worst part of the centralized currency, is that it is forced on us by legal tender laws that then enslave us to the usury that we never signed a contract on. It's just enforced. You have no choice, and then you end up paying off the interest on the debt, which makes you, again, another slave of the banking system and government. The banks are coursing against us by using this legal tender law system to create vast amounts of fake currency, and then it comes down on us and we pay vast amounts of taxes, or aka extortion fees, to pay off the interest on the debt. Everyone says, well, what about my roads? 0.5 to 1% of the municipal budget on average. Roads, that is what the interest on the debt in the military-industrial complex, that is what you should be most worried about, because they're stealing your money for those reasons, and the government only benefits if people are more in servitude and their money is stolen and they are more in debt, more impoverished, and more begging on their knees for help and any leg up that they can get from this organized crime racket. So we need to understand value. We need to take control of our money, because if we have control of our money, because we're educated on money, if we have control of our money, then we control ourselves. We control our own fate. If they have control over our money, then we are enslaved to those who control our money, those who create the money, those who enforce our money by fiat, by legal tender laws on you. What are you going to do about it, folks? Are you going to be responsible and break free from it? Are you going to, protect your purchasing power? It goes further than just gold and silver. There's cryptocurrencies, if properly decentralized and properly valuable or fundamentally valuable going long term, as well as a blockchain infrastructure that's properly decentralized long term, going forward, useful. Then that's great diversification alongside individual responsibility, alongside as many assets as you can, get out of cash if you can, and on top of that, and by cash I mean fiat US dollars, but on top of that you also have, food, water, shelter, self-defense. You're not gathering things for the toughest guy on the block, and of course, you just gotta be self-sustainable and responsible. Self-sustainable and responsible, independent. Don't be dependent on this organized crime racket that uses you to sacrifice you to the king for the king and the queen as a pawn that you are made to be. Don't revere those chains. Break free from those chains. Be an individual, not part of this collective echo chamber, this zombified public. Break free, rule yourself, decentralize everything, and stop being dependent on the entity that creates Hegelian dialectic of problem, reaction, solution for eternity. Repeat, repeat, repeat. It's been going on for thousands of years, and people don't seem to learn. And we're coming up on the 1,000th year anniversary, 1024 AD in China, of fiat currencies. What have we learned? I hope a bit more nowadays in the age of information. Nonetheless, protect yourselves, folks. Again, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
Like what you see here, OM, don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so heavily demonetized and censored by YouTube as these guys come in and flag all of our content as hate speech. The shadow banning is getting really bad, guys. Also, check our Bitcoin address right here on the screen or in the description below. We really appreciate it. And of course, check us out at the Red Pill Expo 2019. Of course, the great G. Edward Griffin and so many other incredible speakers will be there. Our link for that is below as well. And we cannot forget Mike Maloney's goldsilver.com, which you can also find in the description. One of the greatest market and monetary historians out there. We really encourage everyone to check that out. But until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.
Thank you.